and got a text from Patrick saying, hey, do you want to be CFO? Weird. Like, what a strange proposition. And I, sort of replied rather impulsively saying, I think that's a very bad idea.
Welcome to the Logan Bartlett Show. On this episode, what you're going to hear is a conversation I had with President of Stripe, Will Gaybrick. Will has had a very interesting career, going from an early job at Blackstone while working on his math PhD to Yale Law School to working as a software engineer before ultimately joining Thrive, where he was a general partner and led the investment in Stripe, before going over to Stripe, where he initially started as CFO, then became Chief Product Officer, and now works as President. Will and I talk about a number of different things, including his career arc and how he made each of the decisions along the way, as well as what he looked for in his time as a venture capitalist and what ultimately led him to making the decision to join the Stripe team today. We also then talk about artificial intelligence and where they're using that within Stripe, and also where he sees it going forward. Finally, we talk about the motivations and the things that keep him going today and what makes his job at Stripe enjoyable. A really fun conversation that you'll hear with Will now. Well, Will, thanks for doing this.
My pleasure. Thanks for having me.
So you've had an interesting career path. I want to make sure I get this right. So you studied math at Harvard. Then you went and you were doing a PhD in math?
I was, yeah. I was actually at Blackstone working in private equity at the same time. And then twice a week, I would come down to the Cront Institute at NYU and take classes and then go back to my cube and, work all night. And yeah.
I time management maybe will be one of my questions in a second. But then you were a software engineer.
Yeah.
And then from there, you went to Yale Law School?
Yeah. Actually, fun fact, my first boss as a software engineer was Chris Dixon.
Oh, funny.
Yeah.
At Hunch.
Yeah,
exactly. Chris Dixon of crypto Web3 fame these days. Yeah. Then did you finish Yale Law School?
I did. I'm actually a proud and completely incompetent member of the New York Bar.
Oh, that's amazing.
Today, yeah.
So then Thrive and now Stripe.
Yeah.
As you're making these professional career decisions along the way, how did you think about what to do next?
So I'm a big believer in career construction via induction. I think there's a lot of career engineering you can do. I want to get to here. And it's a classic sort of MBA approach of if I want to be here when I'm 45, then what do I need to do today? At every point, just you meet people, you see opportunities, you work your butt off. And when something seems really interesting and you're really compelled by people, you can jump on it. So Thrive, Josh Koshin and I did not know each other in college. We were 1 year apart. And I was going to work as an engineer at a startup during the summer of, I guess, my second year of law school, and just got a cold email from Josh saying, hey, I'm sort of doing this venture thing. You want to get together? And incidentally said, I need a CTO for my fund. And so my original job at Thrive was to be CTO of the fund. And we were 3 people. It was, a $5 million fund working out of just a random tiny office in one of the Kushner buildings. And it turned out, Thrive didn't actually need a CTO. It needed, someone who could do deals. And so pretty quickly pivoted to doing that. And that was awesome. Loved Thrive. Just amazed by what that crew has done. Some of my best friends over there. And I left Thrive to go to Stripe, similar just because of, it just sort of landed on my plate as an opportunity. I'd been at Thrive for about 5 years. I'd led an investment round in Stripe. I think it was a Series C or something like that. It was a $3 billion valuation, or 3.5. And maybe 6 months later, I was out at a bar in the East Village with a friend of mine and got a text from Patrick saying, hey, do you want to be CFO? And weird, what a strange proposition. And I, sort of replied rather impulsively saying, I think that's a very bad idea. But, Patrick is very often a couple steps ahead of me. So we talked about it for a while. I remember his, because I was, being vulnerable and saying, hey, Patrick, I'm not, I've never worked in finance besides being briefly an analyst in private equity. And he said, well, John and I think we could do it. And maybe I just took that as a challenge or something like that, but jumped over as CFO, and now it's been going on 9 years.
It's funny.
Yeah.
Some of those things, though, take a long time of Yale Law School. That was no short period of time. And I mean, I'm sure Blackstone was a very consuming thing to be doing, also taking a PhD in math on the side. Like, were you, in both of those decisions to do that incremental thing, were you thinking, hey, this will come in handy to some career end? Or were you doing it for the ends of itself, that it was like something that you actually just found fascinating?
Yeah, really the latter. I get pretty excited about things, and I can't really sort of get myself to stop thinking about them. So when I was at law school, for example, I kept my apartment in New York City and was going back and forth. I was at Yale for law school, so I was in New Haven. And by my third year, I was mostly just going because I had started something called Hack Yale. First couple of years of law school, some like Yale undergrads had gotten wind of the fact that I was an engineer. And when I was an undergrad at Harvard, it was like this, early boom time of building startups at Harvard. None of that culture was at Yale when I was there for law school. So this is late 2000s, 5 years after, Facebook had been started. And I started getting these like cold email pitches from undergrads saying like, hey, I have this idea. Do you want to like found this company with me? And so on. And, sort of thinking to myself, like, no, like, I don't know you, maybe, I don't know. But what I decided was, hey, what if I taught these kids these young people to build things? I've been an engineer for a little while. So I decided to start something called Hack Yale, which initially was just me and a whiteboard and 5 kids who sort of had written to me, just teaching them like full stack JavaScript. If you're going to teach them one language, a bit of HTML, you do things on the client, do things on the server. And, the second class, it was sort of like standing room only in the classroom. Couldn't hold a third one because it was just too packed. So I opened applications at Yale to sort of join this class. And in a week, a third of the student body applied to take it, which was sort of, I think, an incredible signal of the demand for sort of like learning on campus, learning computer science on campus. So I got really excited about that and actually spent like most of my third year of law school just doing that. So just, I don't know, get excited, spend time on these things.
Did you ever try to use your law degree in I mean, you actually took the bar exam, which I'm told is not a small endeavor. So was there ever a thought that, hey, I should use this in some capacity? Or
never really. I dropped out of my math PhD program. I just had this itch to, I don't know, do some more school. I really liked it. I mean, it was, freaking expensive. I remember, working in the library to sort of, make sure I could, buy dinner for myself during law school. But never thought I'd use it. There's a great loophole where as long as you're not practicing, you don't have to do the continuing legal education work. So I don't think I'll ever use it, but I loved law school. I learned a lot.
Any of those experiences that you think have been most helpful to your job today at Stripe?
There's probably a good fit with my background to some extent because Stripe is a very polymathic company.
Yeah.
As a venture capitalist, I had the opportunity to sit on a bunch of boards of SaaS companies, and I remember thinking, wow, we got to like build all this stuff for the company to be successful, and we have to ship this new feature and this new thing and so on. And wow, it's so cool they're making all this progress. And when I think about how simple it was just to ship software at a SaaS company, I feel very jealous at Stripe because at Stripe, it's sort of like, okay, we're kicking off this initiative. We need to think about what are the financial crimes mitigation implications here? Are we creating credit risk? Are we licensed in the ways we need to be? Do we have the partners lined up? Partnerships like financial institutions will take many quarters to line up. So this sort of polymathic background of being able to dig in on, anything from the shape of the product and technical designs all the way over to very high level sense of the legal framework I think it's paid dividends.
As you think about learning things that benefit you with Stripe, as well as, being able to learn as well as you have across a bunch of different fields, do you have any interesting techniques or ways of learning and getting up to speed in new areas? I was listening to a Yale talk you did in 2015, and at that point you were talking about AI as a field
Mm-hmm.
almost 10 years ago. And
Yep.
so I assume you were doing things back then to realize the opportunity that artificial intelligence could present. So I'm curious, are there any
Yeah.
techniques or ways of learning that you think are interesting?
Well, I'll tell you a new one for me, which I'm behind the curve on, is YouTube.
Yeah.
Like I was just spending a bunch of time trying to understand how the heck transformers work, and I don't mean like how do they work, because no one knows how they work. There's some sort of black box alien technology, but just like literally the architecture of it, and it is amazing. Just like what you can learn from watching a few 10-minute videos. Besides that, as an engineer, I just really like to take things in, via reading. Just, back in the day, learned a lot of just how to do like actual sort of like commercial programming via Stack Overflow and things like that. Yeah, I read a ton. Oh, actually, a good one. So my partner, Emily, and I have a 2-year-old now, just audiobooks. When I had to, walk around with her sleeping on my shoulder forever, just like ripping through audiobooks, and that's been great.
Yeah, it's amazing. I also think YouTube, for everyone knows it, but I still think it's underappreciated for how
Yes.
powerful of a medium it is. I had a friend ask me like what the best books were and getting up to speed on real estate investing.
Yeah.
I was like, just go Google or
Yes.
go YouTube, search it for the next. You
Yes.
can spend 6 hours and
Yeah.
you'll get it distilled down in a much easier
Yeah.
way and sort
Yeah.
of present it easily
Yeah.
and all that.
And structurally, it makes sense because you watch these videos and you're like, this is clearly a great business for these creators.
100%.
Because I'm sitting through those ads and I'm just like riveted waiting for the next
Totally.
section,
Yeah.
So it just
YouTube
works.
subscription, by the way, the premium
Yeah.
is actually some of the best money I spend
Interesting.
on avoiding those
Okay.
those ads. Just I spend so much time on it, and
Yeah.
that benefit I think is well worth whatever I pay. I don't know what it actually even costs. Looking back on your career, I guess, and then we'll move off career. But were these decisions like calculated risks in how you were thinking about them? Like, were you building pro and con sort of trade-off, T-charts, or thinking through probabilities of outcomes and whether or not it was going to be successful? Or were you just moving forward into what felt right?
Last time I made a big move like this, I guess I was 29.
And that would be Stripe.
That'd be Stripe. Yeah. Or I guess, yeah, just turning 30 at the time. And so didn't have that much to lose at that point. It's hard to walk away from Thrive, mostly because of the relationships and just, we were building something really fun together. But no, nothing has been, too sort of, forecasted or risk weighted in the past.
I want to talk about Stripe, but in leaving Thrive, I'm curious, as a self-loathing venture capitalist, like what elements of the job do you miss, and what are things that you were, that you're glad you don't have to do anymore?
Yeah. So what I miss? Okay, so on this thread of being sort of polymathic, just getting to dip your toes into so many fields was amazing. You and I were talking a second ago about like what's going on in nuclear these days. I'm like, I don't know, man. Like, I get to every now and then read a little something about it.
Yeah.
But you have this license to just learn so much as a venture capitalist. Flip side of that was you learn a lot, but you don't actually get to sort of drive results. And sometimes I just would really want to get my hands dirty. And with Stripe, for example, I was like, kind of getting jealous of they're building this awesome stuff, and I'd love to get to do something like that, and ended up getting the opportunity to. I know there's lots of things at lots of firms, like internal firm politics and things like that. Fortunately, we didn't have that at Thrive. Such a tight partnership. And I guess maybe the other one, venture capital, you get to meet a lot of people. And that's great. You get to, everyone wants to talk to a venture capitalist.
Yeah.
That was my experience.
Yeah. So Stripe, I guess you came in as CFO, and the company was about how big? How many people?
I think I was employee 290 something.
Okay.
And probably net of, attrition, probably 250 people at the company.
And so then you stayed on as CFO for longer than I think was originally planned. I guess when you originally joined, was CFO always going to be an on-ramp into doing product-related stuff, or was that something that you decided along the way?
Yeah, I've never actually directly asked Patrick this, but I think CFO is kind of the job he had to give that I might take. So I took it when in 2015, and then in 2018 became chief product officer.
Along with CFO.
Yeah, along with CFO. It's funny. Back then, I was more fashionable, more tighter jeans, and one of our employees used to joke, CFPO, Chief Fashion Pants Officer. That stuck around Stripe for a while. And then, about 2 years ago, moved into this president role.
You did the dual for a while, and then president happened after you shed CFO. Is that right?
Oh, yeah. Sorry about that. Skipped a step. We then hired a CFO about 4 years ago, and then now we have a different CFO as of about a year ago.
Okay, and so from a functional standpoint, what rolls up into the president title now?
So from a functional standpoint, a lot of just day-to-day running of the company. So product engineering, we have a separate infra engineering group under our CTO. Company operations, from GTM operations to product operations. Risk, partnerships, professional services, a lot of things like that. And then, so the job description day to day is just make the business successful.
Yeah.
John and Patrick run the company, and I think day to day they look to me to do a lot of just sort of running the business.
Yeah, got it. So I guess over the course of the last, 18 months, 2 years, like when has this shift sort of happened from more growth to the balance of growth and profitability? When did that happen?
2022.
2022.
Yeah.
Were there things you did as a part of that process that you would recommend just as good operational hygiene for companies that maybe think they're operating at, 90% as skinny as they should be, but, sort of thinking of the other knobs that they can turn?
Yeah, well, so it's interesting because up until the COVID bonanza, we ran on a principle that we would always be cash flow positive. Now, I actually don't think that's wise advice for a lot of companies, particularly if you are sort of a classic, enterprise company and you have very good foreseeability and you're sort of like, 2 to 3 year LTV on sales and marketing, or a return on LTV to CAC over 2 to 3 years on sales and marketing. In that case, you actually might want to dip into, spending a bunch of cash, burning cash. But we always decided to run the business actually cash flow positive. Then along came COVID, and there was sort of a harrowing moment where it looked like the company was going to just stop growing altogether, and then growth just went through the roof. And I don't know, drank the Kool-Aid or whatever analogy you want to say around sort of really investing at that time. And it's the first time we dipped into burning cash. Interestingly, to date, we've still never burned $1 of investor money because we had accrued so much cash from operations to that point that even when we started burning cash, our cash pile never dipped into like needing outside capital. But two things happened at that point. One was the median average tenure of employees sort of fell off a cliff. When you're growing year on year at like 100% headcount, that means the median person at the company has been there for 6 months or less.
Yeah, and probably less when you factor in attrition.
Exactly, and that's just sort of terrifying if you think about it. And the other was, we just related. We didn't see the productivity gains that you would think of, like we're adding, as much capacity as we already have, we should be able to go faster. And it just didn't play out that way. I think there's some like pretty deep points around capital allocation in this. Like there's some kind of like dangerous correlations or dichotomies that people make. There's the classic one around, speed and resourcing, like or features and resourcing. Like I can give you A, B, and C if you give me more people. And I think you just find that your really great leaders self-solve so much more than others. And so, you stack something on the top of the of the stack rank, and something else will pop out, and you won't care. You won't even know that something else popped out because they just have reallocated so thoughtfully. And then another one is sort of speed and quality. We added all these people, and there's a notion that you can either go fast or build things that are high quality. And in fact, it's sort of interesting because I think they're strongly correlated. Just the teams that go the fastest build the best stuff, and the teams that go slower like almost never build good things. So, I think just really scrutinizing your spend, particularly in product engineering, where you spend the most money, is a good exercise to do. We actually now institutionalized this, where every single year when we do budgeting, the first thing we do is we squeeze. And so we say, what you're getting for next year is you're actually netting down your OpEx spend. So you're going to spend 10% less. What are you doing? And then we sort of reclaim that spend and then reallocate it to teams.
It's like a different zero-sum budgeting, but
exactly. And you just, it's like building a muscle group. We want people to leave Stripe and they get hired to their next job and, sort of bring in the Stripe way of, driving efficiencies and allocating capital. And so we think of this as something, if we do it every single year, our leaders will get better and better at
it. In terms of hiring now, the incremental person, I assume there's a lot of scrutiny put on bringing new people into the organization.
Yeah.
Are there certain, I'm sure you guys have your set of values and all the things that you hire for, but are there traits that you found are they Stripers? What are Stripe employees called?
Stripes. Yeah.
Stripes.
Yeah.
Are there certain, the most successful Stripes that have spiked and risen quickly and taken on a bunch of leadership? Are there certain qualities that you found have just sort of risen above the noise, and really solving for those is more important than anything else in a hiring process?
Yeah, there's a few. So one of our operating principles, elevate ambitions. And I think one of the reasons why people get excited to come to Stripe and stay at Stripe is it's sort of like an infinite problem space. And actually, I always looked for those when I was a VC. Like, are you investing in a company that's going to sort of solve a thing and be done, or is just like always going to be more roadmap? And for Stripe, it's like we have at least a decade more things that we want to build right now that we'll get to over the next couple of years. And so this notion of just like the bigger vision and where we're going long term, and just believing in the company really being able to have macro impact that sort of aligns with the mission of growing the GDP of the internet. So this elevating of ambitions, this thinking big about really being able to do something that's sort of systemic in its impact, is one. Second one, I think there's an Amazon operating principle around this, but so leaders are often right or something like that. I can't remember how it's phrased.
Yeah.
But judgment, it's amazing that you sometimes find that you're sort of micromanaging way down in the org, and then you realize like, okay, I have sort of a problem like right below me. Not necessarily this person's not a good leader, but why am I having to sort of go around them or so on? And a lot of people who rise quickly are coming up because they're just, without a whole lot of coaching, doing the right thing over and over and over again. And that sort of just entrepreneurial, ambitious and just high judgment execution really helps. And then interestingly, I would say there's something around just a desire to create something beautiful, which sounds a little bit hokey, but a lot of our best leaders are just galled to no end when they see in our documentation that the string formatting is like different between two different pages. Like, here we use a floating point number with 2 decimal points, and here we're using, 1, and that's like drives them crazy. And I think this is like something that sort of drives a lot of our best users, is we want to, create something truly great for our users.
Are there ways at which you can tease out the judgment thing, or I guess the design appreciation in interview processes, or are those just, hey, those are learned qualities that you see once people get into the organization?
So on the design side, we've actually since changed this, but something I kind of like to bring back. One of our interview questions for PMs joining Stripe was to choose one of several integration paths for Stripe and just do an end-to-end integration. And this is kind of table stakes. I think you can be a product manager at a lot of companies and not really know how to fire up the command line or sort of, let alone just making sort of like, curl commands, like build a real integration, and have them write, what we call a friction log, which is just what went well at every stage, where did you run into trouble, and so on. And you could see, when people were really opinionated and, just this could be better. There's a pointy edge right there, or I can't believe you didn't do this. And almost as I can't believe the people you want to hire. So you could select for it a little bit.
Yeah. The judgment one's always interesting. I find, at least when we're hiring people to be investors or within our organization, there's generally stuff you can tease out in a resume and just have them take you through how they made each decision along the way.
Yes.
And you learn a lot about people's intuition, their judgment, how pragmatic they are in the decisioning.
Yes.
And if you've made a handful of decisions that were, wrong at some point, you're not self-reflecting on why the inputs are.
Yes.
So we try to tease out judgment as much as we can on the interviewing side.
And you want to see that like learning mindset where if you ask them, can you give me an example of when you were wrong or something you failed at? If they really have to search for it and they can't, give you a good, then that typically means that maybe something's off, is too harsh, but you're not getting.
I think it's right. Yeah. There's a lack of self-awareness or at least self-reflection.
Yes.
And at the end of the day, that's sort of all we can do as humans, but maybe investors specifically, is just like continue to tweak our mental framework by which we make these decisions.
Yeah. To the point on sort of, learnings around COVID time. I mean, companies learn by failure or trauma or whatever. And I really think the same is true for individuals. Like I remember, so we run Stripe sessions every year, which is sort of our Dreamforce. It's a little bit different, but it's our global user conference in San Francisco. And John and Patrick typically open it, and then I sort of MC it and deliver a couple of sections, and some of our other leaders do demos and host some of the sections. I remember in our first one, we had been for a long time negotiating a deal with one of our financial partners that would allow us to geographically expand a lot faster, but it wasn't signed. And in the closing, we had this sort of like big moment. We're talking about like next year's roadmap. And I made a very, very bold claim about geographic coverage that would be available by the next sessions. And about a month later, the deal fell through for a variety of reasons. And so, fortunately, I don't think people cared enough about Stripe at the time to really notice. But I learned then, like, make sure the deal is signed before you tell the world.
Exactly. You announce it. As you reflect on your now 9 years.
Yeah, going on 9.
Is there something you wish you knew specifically that stands out that, man, if I had thought about that, 2015 when I was joining? Because Stripe was kind of was it your first company? You were at Hunch for a little while, but is there something from an operating standpoint that you wish you had known in 2015 that you know now in 2024?
I mean, so many things, because just thinking back then, no false humility here, just knew so little.
Yeah, sure.
Right?
Anything that immediately jumps to mind, though, that was like a light bulb moment when you finally realized it?
Yeah, one recent one is, I think when you are designing organizational systems and processes, you have a tendency to design them for yourself or like for leaders. And in some cases that works, but it's almost never the right design center. The two that are most common are, one, as I mentioned, a second ago, sort of your leaders, like the people who are just sort of you're leaning on to drive day-to-day execution. Or I think the one that people often don't think about is line managers. Because very often, if you want things to get to you, with sufficient granularity, like you want information to cascade up to you, you need them to be undertaking a certain process all the way on the front lines. And if you want them to undertake that process, with high sort of fidelity, they better like it. And so, a lot of what we do to make decisions well and make sure the right decisions are hoisted up in the right ways is figure out what are the mechanisms that if you're blocked on the front lines, you'll say, oh, I know exactly how to unblock myself, and you do it right there. Or actually a better example. you want to do capital allocation really thoughtfully. Well, what do you need to do that? You need observability. You need to know what people are doing. Who knows what people are doing? Line managers. So how do you take what's in their heads and what's happening every single week in their teams and get it rolled up to you? You need to create the thing that they want to use to run their weekly meeting. And so we spend a lot of time on that. And it's actually part of like spinning up at Stripe. Here's how you do a weekly business review. Here's, what it looks like to operate really well on the front lines. Here's all the systems and resources we give you. And then, surprise, surprise, like out of that pops all the information that we need.
Have you guys built something internally, like from a codification standpoint, or is there tooling that you guys use that actually rolls up?
Yeah, actually, we've really doubled and tripled down on it. We have a product internally called Compass. It was originally built just for product development tracking. And actually, it was only recently that we made it mandatory. It had a ton of use already. But we use it for like NPI, new product introduction, initially. And then what we realized was that it could be so much more. And so now we run weekly updates out of it. You can follow projects. It'll send you a digest. All of our product development processes are sort of institutionalized and systematized in it. So we have various gates towards launch. One thing that we do is something called implementation review. It's like a peer review internal to Stripe. So before you ship your thing to public preview, it has to run through another Stripe, a trained implementation reviewer doing an end-to-end integration, writing up a friction log, saying everything they found. Then you go through it. You say, what are you going to change? What are you not going to change? Ultimately, there's sort of a rapid, like a decision making. That's the form of decision making we do, where the head of the business unit actually says which changes need to be made. So it's this complex process, and the whole thing just runs through this tool.
Super cool. Yeah. What's the biggest challenge that you're thinking about today for Stripe?
There are a lot of them. One that is persistent but very top of mind right now is migrating users to new versions of our API. We've made, always made the very user-friendly choice, which we're going to keep making, to sort of have a very, very generous end-of-life policy. So basically, if you're using Stripe and you're not sort of trying to adopt more of it, it's just going to keep working. Right now, because we sort of moved not just like sort of beyond payments, but to this world where we have, this billing suite that we announced this publicly. It's a $500 million business growing like crazy, and we've got all these products in Connect land where you can sort of store money in the cloud. We're having to refactor like all of our abstractions because a lot of the guarantees that our API sort of looked at, like if I process a payment, then all the settlement will come through Stripe's rails, are being relaxed. Like one of the top user asks for billing is, I really want to use Stripe billing, but I have a 4-year contract with TSYS or WorldPay or some other payments processor. So can you like plug that in? We announced this publicly at Stripe Sessions. That's actually now in private preview, so you can do that. But some of these changes sort of run through a lot of our abstractions. So we've actually now cut a V2 of our API, which actually makes some updates to the API semantics as well. And we are going to have to maintain backwards compatibility. So if you're a user out there, don't worry. But we also are going to be able to ship so much value so quickly by getting people into new versions. And there are just thousands of lines of Stripe code written into a lot of users. So figuring out how to do that is a big challenge.
Yeah. As you think about payments and Stripe, I guess, in the next 5 years, 10 years, what are some of the biggest changes that you think are inevitable that might be unintuitive to people just going about their day? I mean,
I mentioned it in passing a couple of times already, crypto.
In what way?
I'm so excited about it. I'm so excited about stablecoins. So Stripe's history on crypto. So I think it was before I joined. Maybe it was 2014. We were the first major payments company or whatever, if we were major at the time, to support crypto pay-ins, and it was Bitcoin pay-ins. And then we sunset that a few years later, maybe it was 2017 or 2018, because it was just all fraud. Just all, bad actors trying to cheat the system. We lost a bunch of money on it. And it's not surprising. Bitcoin is not a good instrument to make payments with. It's a much better store of value or sort of like long-term asset to hold. And we took some heat at the time because, crypto then sort of started heating up again, and then we sort of jumped back in a couple of years later, building a crypto on-ramp. And then, we had this next crypto winter, and I think a lot of people sort of abandoned crypto. And the thing we've just seen as a through line that is just compounding and compounding and compounding is stablecoins. So we mentioned recently that we're shipping stablecoin pay-ins. So you'll be able to, as a Stripe merchant with no integration changes, accept payments in stablecoins. I think it's just USDC to start, but we'll be able to very quickly expand that. And we're now very recently in private preview. And I think it took 2 days for our cumulative volume in stablecoin pay-ins to pass our cumulative volume over a year and a half or 2 years on Bitcoin. So it is just
what is the use case for stable coins?
Yeah.
And maybe a quick primer for people that don't know what stable coins are. If you could just explain those too.
So stable coins are just crypto assets that are pegged to a fiat currency value. And there are now EUR, Euro rails. I'm sure there's other rails too. I'm sure there's GBP rails, but really USD rails are sort of winning the day. So there's USDC, which is a sort of fully collateralized stablecoin that was started by a company called Circle. A big partner in creating it was Coinbase. And so for this, it's like dollar for dollar collateralized. So in theory, it can't lose its peg. Fun fact, it actually did briefly lose its peg when SVB went down because they're storing some funds there. But in theory, it's sort of, securely backed. And then there's algorithmic stablecoins where via trading algorithms, they sort of maintain their peg. So Tether USDT is the most popular stablecoin.
Yeah. And so then what is the use case that you guys see over time, or how will that change people's experience as you look out 10 years from now?
It's kind of funny because we were all fumbling around for the killer app in crypto for a long time, and you had the ETH world computer, which by the way is a beautiful vision, and there's like so much value in Ethereum as a platform. In fact, a lot of stablecoins run on top of Ethereum or sort of L2s on top of them. You had all of the speculation that was happening, and Dogecoin and all the other fun coins. Dogecoin sort of the GameStop of stablecoins. Of crypto assets. And it turns out that just the killer app is just money. It's just crypto works well as money as long as you sort of stabilize its value. So many parts of the world just don't have currencies that you can trust. When you look at Southeast Asia, you look at, I think in Vietnam, the adoption of stablecoins is just booming, and the economy is actually taking off there. If you look at the charts, it actually looks pretty correlated. Very young population, very sort of crypto literate. So, for us, part of Stripe's mission has always been to increase the pace of globalization in commerce, to break down barriers to cross-border commerce. And, there's a lot of those barriers that exist, that are sort of written deeply into the existing financial system. And the notion that you could have one globally applicable protocol to program money in the cloud, you can see how that would get us really excited. So what we're seeing now is that companies that ship software, B2B SaaS companies, already major conversion uplifts for them when they accept stablecoins, because if you're in Rwanda, it's pretty hard to sort of get a electronic payment instrument that Stripe accepts. But if you can get on chain with stablecoins and you want to buy a piece of software that someone built in India or San Francisco or wherever else, USDC works.
And so now you're seeing this in in mostly international markets that have volatile domestic currencies? Is that the primary place that this is unlocking?
I think that's where it'll gestate. And it is gestating quickly. I think it was something like $4.6 trillion over the past 12 months in stablecoin transactions. Now there's like a Visa report saying that a lot of those weren't actually payments, and that's fair. Like, some of it's probably high interest rates and people just wanting to be in stables because they can, you actually earn pretty good interest rates just from holding stablecoins. But there's a real exponential curve here, and my sense is that the emerging world will sort of normalize stablecoins, and they'll sort of bring all of us who have very stable currencies into they'll sort of acclimatize us to the notion that it's a perfectly, perfectly normal and well accepted way to transact, and that over time, like moving between stables and fiat just won't be a big deal.
And you think that the adoption versus Bitcoin, the reason it's growing so much quicker, is it the confidence in the price versus Bitcoin is going to be far more volatile, or why is it seeing such faster adoption?
I think so, and because it's the performance is a lot better. So a lot of stable coins will run on L2 chains. So these are sort of chains on top of chains that will batch together transactions to increase the rate that they're at which they're confirmed, and decrease the cost of them. And so Bitcoin, there is a Lightning Network, but just Bitcoin in general is a pretty slow and expensive protocol. I think even just on Solana, which is a very popular L1 chain, I think just native on Solana, no L2s, I think it's 400 milliseconds now for a USDC transaction, which is pretty amazing.
Yeah. Artificial intelligence is obviously one of the topics everyone's talking about. You, in prep for this, I went back and listened to a 2015 talk you did at Yale, and you actually said that was the technology that you were most excited about. I think you were even still at Thrive at the time when you were doing that. I'm curious what your perspective has been, both as a former investor and sort of looking at the opportunities that are there, but also as an operator within Stripe of all the AI stuff we've seen over the course of the last 2 years.
Well, listen, it's hard to match my enthusiasm about stablecoins, but I'd say,
I know. Yeah.
I would say that, a lot of what's happening in AI is right up there too. I think the thing in 2015 that I was seeing was just deep learning looked like it was really going to work. And so if you believed in sort of continued Moore's law effects, then it just, you would see this sort of exponential improvement in the ability for large deep neural networks to just do powerful things for the world. And that was about
the video's out there. So I this is not some hindsight revisionist history. The video exists of you saying this.
Yeah,
so
I will say that was the extent of my prescience. It was very basic. I had no notion of transformers, even though those were near at hand, or large language models, or just the concept of foundation models in general. I think it's all so fascinating, and I can talk a little bit about the applications at Stripe. So at Stripe, we've been using machine learning for a long time.
Sure.
And,
I'm sure fraud detection or whatever.
Exactly.
It's fundamentals of the business.
Exactly. Yeah. And we have about something like 100 models, in production to augment our products. There's 43 that are sort of critical, like sort of in the charge path or doing major risk mitigation things. First model was shipped in, I think, 2015. It was like a linear regression model, even how it worked to mitigate fraud. So that's how sophisticated we were at the time. But flash forward to today, I think we've publicly stated that we've been toying with our own foundation models. And foundation model, basically any large model trained on, large means many different things. For us, it means, order of 100 million parameters. For the GPT ends of the world, it's many billions of parameters, or hundreds of billions of parameters, I guess at this point. with like sort of self-supervision. So there's no sort of, here's the input and here's the output we expect. And it's actually just sort of trying to take concepts and embed them in context, and then you can sort of run models on top of that. And this sort of like this sort of embedding in context is what gives rise to this word embeddings that everybody uses all over the place and loosely. But just to give you a very simple example of like something that's really working at Stripe, card testing has been on the rise on the internet, maybe correlated with the rise of AI and ML, because it's just easier to spin up machines to do basic things like this. So card testing is, steal or buy a bunch of credit card numbers, and then go to just random, websites and perform transactions, just small transactions to test, does this card work? And then you could sell it yourself or use it for something else or otherwise. And these used to be pretty easy to detect because they would be sort of one merchant and they would spike. It used to be sort of, oh my God, merchant X is seeing a big card testing attack. We're sort of working with them to mitigate that. And we provide various protections built into Radar, our fraud suite, and so on. We're now seeing some more sophisticated ones where card testers are sort of dribbling attacks across like different sites. So it's just 2 or 3 transactions here, 2 or 3 here, 2 or 3 here. So very hard to detect because no one merchant is really suffering, but Stripe overall is seeing a huge spike. And, that can hurt the sort of, integrity of the ecosystem, violate card network rules, things like that. And so what we found is actually taking just raw payments data. So just take like a giant JSON blob of payments data. Like here's what a payment means to Stripe, stringifying it, just turning it into like pure text, like tokenizing it, just slicing that up into tokens, and feeding it into a transform model, has led to the ability to embed, payments in a way that it's completely unintuitive to a human. We can't sort of point to any single cluster and say, oh, this is exactly why those payments are clustering there, or these are there. But we've been able to identify just in the clustering that happens from these payments, just which ones are more or less likely to lead to card testing. So we just take a new payment coming in. Maybe it's just one of 3 card testing payments on a site. There's no spike for us to detect. And this model will be able to tell us in a way that no hand-curated features ever could have, that, hey, just so you know, that one random transaction that doesn't look suspicious to you is actually very likely part of one of these distributed attacks. So it's been really powerful internally already.
Are you doing that on top of one of the big model providers, or how is that actually like technically working?
So in this case, no, it's actually just ground up our own model. We are toying with leveraging some of the existing models to actually do some multimodal embeddings, which we're excited about. There actually are some really cool, like just almost off-the-shelf applications that have worked very well for us. So one of the things that is a core part of our strategy is to be sort of conspicuously good at risk mitigation and to be incredible stewards and sort of guardians of the global financial ecosystem. We invest just a ton in risk management, and we just there's one of our leaders once said, risk management to Stripe is like Amazon logistics is to Amazon. And I actually think it's a pretty good analogy. Like we just need to be best in the world at it. And there's a notion that fintech companies are play it fast and loose, and there actually clearly was some bad behavior with FTX and obviously there this isn't fintech, but with SVB going down and FRB going down, there's been some tightening in the regulatory environment, and so we've just been doubling and tripling down on risk mitigation at Stripe, and big banks sort of do a very good job of complying with literally with what regulators want. We always want to do that too. And we want to go a step further and just think, how can we be doing this better for the world? And so we built something called Inspector GPT, which lets us do sort of continuous TOS compliance for our users, TOS compliance. There's a lot of different very, very, very idiosyncratic rules about what you can and cannot sell coming in from different financial partners up and down the stack. So something as sort of scary as AR-15s, maybe that's not idiosyncratic, to something as seemingly innocuous as CBD, or actually even more innocuous like tarot cards. So financial partners don't want you to sell tarot cards. What we've historically done is we've underwritten our users when they're joining Stripe. We use models to do this, like classifier models and so on. And then, we'll review them again from time to time at, different checkpoints. So if they are now hit $500,000 of volume or, 10 million of volume or whatever. But we're actually able to leverage sort of commercial chatbots, ChatGPT or Claude or, Gemini. Really, any of them have worked so far. Feed them our terms of service and just point them at our users' websites. And they just will periodically go and say, hey, I took your 25-page, like super intensive TOS, and I think I found a violation on the 26th page of their product catalog. And it's because this spa, which sells 308 services, one of them is tarot cards. And that violates provision like, 3A, triple I, whatever, of no tarot cards according to this financial partner. And just, that's, I think the state of the art for this is sort of like sending humans with like the printed terms of service docs.
Sure.
And like maybe screenshots and, having them do this in low cost locations. And it's just, been really, really impressive and really, create a lot of efficiency.
I think everyone talks about the human replacement side of this, but the superhuman element of it is super cool when you can find that. It's not just, oh, you're making engineering productivity, whatever, this much better. We're automating customer support, so we don't need to hire people in Manila or whatever it is to do this. But actually being able to do things that humans couldn't do, or maybe would be very hard to do as effectively as that, like going over terms of service and being able to catch things on distant web pages.
I totally agree. And actually, one of the things that is that I've been thinking about a lot on this front is just the sort of what are the implications for human knowledge period of the black boxiness of neural nets and transformers in particular. Just, we don't know how our model was able to tell us that particular payment was likely card testing. And the model isn't able to explain why it was. Like, there are ways in which, we're sort of getting better at explainability.
And you found it sounds like the accuracy to be
very high.
Yeah.
Outperforming, what we had with hand curated features by a whole lot. And so, there's something deep there about how we need to think about developing our products and enforcing risk standards. Like if we are virtually certain that the model is right, but we don't know why it is, what does that mean?
Yeah. There's so many moral questions with AI in general, but the potential of bias or whatever, like it's great when it catches the positive, but the false negative in this stuff when it can't explain how it came to be. And it could be making racist assumptions or like you don't know what the primitives are by which it's making those decisions, which is fundamentally interesting. How do you go about your corpus of opportunity to apply artificial intelligence is got to be up there for almost any organization. And you also uniquely have the competency internally to do a lot of these things. Like maybe Exxon has similar, but I don't think they have the competency to go execute it on it right now. Not to disparage anyone from Exxon listening, but how do you guys come up with like what is worth testing and going after from an artificial intelligence standpoint versus what falls below the line and we should just keep doing it the way it is?
Yeah, I mean, some of this is cultural. You want to, well, I guess there's a couple things. So one is from a systems and tooling standpoint, you want to just, give people the agency, like the technological agency to start using these technologies. And so we've made a bunch of investments on those fronts.
And that just means having access to
Yes.
these tools.
Yeah. So, one of the first things we did after the whole, sort of explosion in chatbots with ChatGPT coming out was we just, created a Go link internally. You type Go/LLM into a Stripe computer, and it takes you right to an LLM interface. At that point, it was just GPT-3. Now you've got GPT-4. You've got Claude, a bunch of others sort of in there, and we sort of ragged this, meaning we sort of gave it some additional specific data on Stripe's internal documents. We purged any user-specific data because we didn't want anything, that's sort of native to users to get into these tools. But we Stripe's documentation it's trained on, things like that, and just sort of gave that to people. Took about 10 days before usage sort of started to level off, and it's actually kind of stayed there. About a third of the company is weekly active, and the vast majority of the company is monthly active. And it's kind of cool too, because we created a community around it where Stripes would sort of share their prompts. So we actually have a prompt now that can take any corpus of text and rewrite it in the Stripe tone. We are, as I mentioned earlier, sort of really motivated internally by creating something beautiful, being, as we say internally, meticulous in your craft. And so if you're, a sales rep or an SDR, and you just want to make sure you're writing a good email and that it sort of it abides our style system and our tone and so on, you can just toss it right in and it'll make some changes and shoot it back to you. Second step was just making sure that from a technical standpoint, we had API endpoints set up to do development with LLMs really easily. And then the third, which just I think goes to product development generally at Stripe, is making sure that you make room for your teams to, have better ideas than you have, and surface those. So there's definitely ways that we've been sort of tops down prioritizing our investments in AI, but we also have seen some really cool bottoms up applications.
In terms of like empowering autonomy of decisioning within the organization and just letting people go do that stuff, are there any, clearly it's partially how you hire and what you incent people to do, but are there any forums or means of facilitation that you guys have done, like I don't know, hackathon days, or it sounds like that prompt sharing is one, but anything that stands out there?
Well, so in general, I mentioned this in passing, but I didn't define it. So we actually have introduced a formal decision-making framework. And to anyone out there who is like worried about adopting one of these sort of very corporate frameworks, I will tell you it has worked so well. We use one I think it was developed by Bain called Rapid, where you have a recommender, agreeers, input, performers, or I guess inform. I always say input, but it's kind of both. Perform and decide. And particularly given that we don't have titles, this has been very, very valuable for us. So basically any material decision is, you define the rapid. I was worried about sort of the recursive meta decision of like what's the rapid for defining the rapid.
Yeah.
It turns out no one really cares. They just want to know that there's a formal way this is being made. We have a decision log we built. A decision isn't real if it's not in the decision log and discoverable and so on. And so, that's how we've like really worked on decision making. It's actually helped a lot. Certain decisions go to certain forums. I make every pricing decision personally, just for like pricing consistency across our entire product base. So we have just sort of various, defined rules and systems. For ML, we have maybe two formal ways we've made decisions about how to invest. So one is we actually do run what looks kind of like an internal accelerator. It's a bit of an experiment right now, but we've been doing it for a couple of years, or a couple of cycles. So 1 year, it's called our experimental projects program. And this is just a program, it evolved from what used to be called our Crazy Ideas program. Crazy Ideas program was just, we sent around a Google Doc to the whole company and you could write stuff you thought we should do in it, and then we'd read it. got a little bit big for that. And so now you can apply to just sort of be seconded onto your own team or a team working on the thing you're proposing for a period of starting 6 months, and then you can keep going if things are going well. And we ran one of those, in particular for ML. So it's just sort of like, hey, we want an entire batch of teams just saying, I want to do this with MLAI, I want to do this. And some of the ideas or things that would be, sort of maybe obvious, docs AI came out of that. So just a more AI-driven way to interface with our docs. There's some cool ones that I shouldn't talk about yet, but they'll be coming out soon. And then the other was actually centralizing some of how we operate in ML and AI. We used to have a lot of different nodes in the organization. And that's how we ended up with, over 100 models and, some of them performing well, but no shared features across them. And we've now created in what we call our information org, sort of a center of gravity and center of excellence. We hire researchers onto the team. We're actually going to be announcing soon some pretty cool research areas that we're undertaking at Stripe. And this sort of core group is responsible for this sort of foundation model intelligence layer, where you have the shared embeddings and shared features across everything we do at Stripe.
As an investor at Thrive, you obviously made a very significant and successful investment in Stripe specifically, and then you doubled down on it. What were the things that you looked for in companies or founders or teams? Like, obviously the Stripe investment has proven to be a good one for Thrive and for you at a personal level. But was there specific things that you really sought out when making investments?
Well, I think you're a B2B SaaS investor, so you can discount all of this, but I can give you my framework at the time.
Like it. Yeah.
When you're an investor, and it's true, I guess, when you're a capital allocator at a company, you're always trying to reduce dimensionality as much as possible. Like, there's just a million different considerations, what really matters. And so from a market standpoint, for B2B investments, I always just thought about a simple 2x2 of on one axis, universality, and the other axis, just sort of core versus non-core. So does everybody need it, or do only a few people need it? And then for core versus non-core, sort of the question is do people want the best one?
Yeah.
Or are they okay with just any old one? So I used to be on the board of a company, a great company. We use them at Stripe. It's really awesome, called Greenhouse. And that investment has gone well for us at Thrive, or former us, now the Thrive guys. That's a sort of a classic universal non-core, where everyone needs an applicant tracking system, a way to track the recruiting process, but it's hard to get a lot of pricing power, hard to get really deeply integrated into the company, and it's just not sort of a core consideration for senior leadership. Stripe to me was just the top right of that 2x2, where it's what is more core than your money movement? And maybe you needed to have a sense of the vision for Stripe. It wasn't just accept card payments. It was, hey, we're going to be commerce infrastructure for the world, and then everyone needs it, right? Everyone's going to move money around.
And the pricing power you have, because of the best of breedness being 0.1% better, or could lead to significant pricing power, because for an individual merchant that could be material dollars.
Yeah, absolutely. And there's the sociology of payments procurement is very interesting. I won't sort of bore you with that unless you're keen to understand it. But with larger users, the breadth of what you do for them really matters, and they want to see the precise the pricing tied to the value in each dimension. But yes, the short answer is yes. And then for entrepreneurs, and I guess for leaders in general, it's a good pattern match on when you find someone who just seems to have more hours in the day than you can possibly believe. That tends to be a good entrepreneur. John and Patrick, I just was struck by how prolific they were.
Probably reciprocally with you, going to law school and PhD and all this. They probably were drawn to that on your side.
Failed PhD, but that struck me about them, and the judgment point that I mentioned as well.
One of your responsibilities has been leading product within Stripe. I guess I'm curious how Stripe's product organized? How do you think about what is the platform versus what are the applications that sit on top, or what are the primitives versus what people get individual decisioning authority over?
Yeah, and I'll sort of give you the architecture view and then the institutional organizational view, because I really do believe in Conway's law. It's served us very well to follow it. So from a architecture standpoint, Stripe started back in 2011, accepting card payments in the U.S. Evolved a lot since then. Sort of phase 2 was maybe accepting card payments in other countries, and then adding in some local payment method support. In Europe, for example, we expanded to relatively quickly. Every country has some local scheme that really matters to payments in that country. And if you don't accept that scheme, you lose a lot of transactions. People are just like, oh, it's only cards. I wanted to pay with Ideal in the Netherlands, or Swish in Sweden, or whatever. So that was sort of phase 2. Phase 3, we started dabbling in other ways of of money movement. Like it was just pay-ins initially, but then we had Shopify, incidentally, sort of asking to white label our pay-ins API. This is what sort of has led to the really deep partnership with them. And around the same time, we had Lyft. We've been working with them on payments. And as the story goes, I wasn't at Stripe at the time. We were in their office, and we saw that their finance team was sort of uploading flat files to make payouts to drivers. And we said, we can create a better way for them to do that. And so that led to an early version of what we call the Payouts API, which is sort of load money into Stripe and send it. And so this sort of multi-party money movement, even though sort of two different paradigms, we rolled together into something called Stripe Connect. And Stripe Connect has been just an enormous driver of Stripe. 13,000 platforms and marketplaces use it today. And it's a very, very significant driver of vertical SaaS, on-demand economy, things like that. And so this whole thing, like pay-ins, like money storage in the cloud, payouts, converting currencies in the cloud, is kind of what I would call the core business. We call it like a global payment suite, or sometimes refer to the global payments and treasury network. Just basically saying there's all these different ways to move and store money. We have one single API. We can handle KYC for you, mitigate fraud, move money in or out of accounts, and send it globally. And we now support pay-ins across 50 some countries and payouts to over 100. So that's so the core business that you've probably heard of. 2018, we created something called Stripe Billing. Are you familiar with Billing? Yeah. So Billing was originally just this very basic subscriptions API that we shipped, way back in 2011, 2012, where you could literally just add a subscription to a customer object in the API, and it would just sort of bill that person on some cadence, some amount, very limited. You could only have one subscription per customer, was not fit for purpose unless you had the most basic use cases. 2018, we shipped Billing, which was just sort of a small team doubling down on this, sort of making it a little bit bigger. And it sort of incidentally, I think B2B SaaS was really booming then, and got like a lot more pickup than we expected. And so this whole area of sort of becoming your billing system and helping you implement your revenue models, track your customers, innovate on your commercial model has become enormous for us and for our users. It's now something like 300,000 users of Stripe Billing, and actually growing very, very quickly. And the sort of adage I have is, and this goes for Stripe as well, everyone has a billing system. Everyone hates their billing system. And it's just one of these things where, like, if you've had to work on billing systems, as you hear me talking, you probably feel it viscerally. It's like, your go-to-market team says, hey, we want to rebundle this in this way, or we actually want to pre-bill for this thing or whatever. And you're like, oh man, okay, well, we'll give you that in 3 quarters. And so what we're trying to do is, just take that entire team, allow you to repurpose them, or at least give them a lot more leverage to do what they're doing today. And we sort of rolled this all together with some adjacent services like tax, like assessing sales tax globally, analyzing your revenue, revenue recognition, things like that. This sort of like area between the CRM and the ERP into what we call revenue and finance automation. And this is a major sort of bet for us today with billing as the core. And it's a really fun product space. We sort of stumbled upon it to some extent and sort of can't believe that it's as greenfield as it is.
Yeah.
And digging in, we sort of understand why. It's actually really hard. We've had to rejigger our strategy, several times. So there'll be a fun announcement on this in the future. But we've now sort of prototyped our own language that sort of that we'll open source at some point that underwrites all the billing primitives because we need it to have have certain aspects of static analysis. We also want it to be pretty simple so that you could effectively test changes to your billing system before actually making them. So that's a huge area for us. And there's a few others as well. But these sort of two foundational, or I guess maybe three foundational orgs, core payments, the Connect org, and then revenue and finance automation. And they all sit on top of a sort of product platform org. And that org sort of ties it all together for Stripe. We used to refer to ourselves as AWS for money, and I think that was just like a very poor analogy. And the reason is when you look at sort of say S3 and Aurora, like different AWS services, there's no sort of logical tie between them. Like how you model data in one versus the other is kind of like your business, and how Aurora and AWS work doesn't really need to be, they don't need to contemplate each other in any way. Whereas the way that Stripe billing works with Connect and with payments is, needs to be, graceful and subtle. Like if we model Logan as a customer in payments, then how our invoicing API thinks about, a sort of credit balance for you as a customer in a different product line needs to cohere. And so this platform org is very important, being sort of the sinews, sort of tying it all together.
And so are there discrete leaders for each of those functional areas, and then the platform underpins it? Or how does like engineering resources get allocated and like functionally, how does that work?
Yeah, so each of those are unit organized. Payments org, Connect, we actually call it money as a service, revenue and finance automation, and then we have the platform org also unit organized. So product and engineering, other embedded functions in each of them.
Interesting. And is that the way it's been for totality of time, or like how has it evolved?
So one thing we've done is we have hoisted more technical unification upwards. So it used to be that you had sort of the classic, Amazon phalanx of, just sort of unit orgs all the way down. That didn't work very well for us.
Because of the need for interoperability in different ways.
Exactly. Yeah, spot on. So we've hoisted that upwards. So you typically have, one of these very, very, we don't have titles, but, some SVP, EVP level person with a head of engineering in each of those areas.
And so then when you're starting a new project, like you referenced, billing was kind of, I don't know if skunkworks is a fair term, but in the early days, it was kind of a small group that got going, similar to the Connect product. Sounds like that was smallish in the early days. How do those things manifest themselves? Like, do you just sort of send some people in the wild and say, have at it, and sort of see if there's traction behind it? Or is it more top down and telling people to go try these things?
Yeah, we've had the benefit, and I mentioned this before, like this sort of infinite problem domain. Had the benefit of just vehement user demands for us to expand into different areas. Good examples, Stripe Tax. Just every year Patrick or someone will tweet out, what do you want us to build next year? And tax was just rising to the top of the list, and so we decided we're going to shoot off a team to go work on that. You have the classic questions of like capital allocation, where it sort of never makes sense from a near-term ROI to spend money over there versus shipping the things that your large users want in the core. So you have to protect them for a while and so on. But usually we have a few gates for each of them. But typically they're non-speculative bets. They're just sort of like, what you need to go execute.
Sure.
Maybe areas like when we brought back crypto a couple of years ago, it's a little bit more, at least that time speculative. Now it feels very non-speculative, but yeah, then it was.
One of the things I heard you say is that companies are often hesitant to force an ROI calculation for early projects. Can you elaborate on that point and why thinking about ROI is an important thing in the early days of building products?
I guess my more specific push is just that, and actually I'll kind of parrot John Collison on this, but we work in an industry where fiscal discipline for the winners is just not that important. Maybe it was very important to Amazon in the early days, but with Meta and Google, just soon enough ads money is geysering out of the ground, and so they're not always the best run companies from the standpoint of just precision around how many people should be doing this thing. Do we know what they're doing? What's our observability into the growth there? How can we think about the incremental benefit to investing more? And then as you grow up as a company, you end up bringing leaders in from these great companies because of like the survivorship bias of that's where the leaders are. And so this skill set of being really, really disciplined with your resources and thinking about that ROI and self-solving, just typically, the sort of leader products don't ship with that feature. And so you want to really, drive it home.
You made a comment earlier about titles, not having those specific titles. I guess I'm curious, there's this Mark Zuckerberg view on titles, which is that they're very expensive. And there's this Mark Andreessen view of titles that they're very inexpensive. How do you think about titling within Stripe and the cost of giving out titles?
So I'll caveat this that I've always had a title at Stripe, so I shouldn't be one to talk, but we
good for me not for thee.
Exactly, yeah. We get various pushes to introduce titles to Stripe. I think that there's a few reasons to do so, and a few reasons not to. And I just think about it very pragmatically in terms of like costs and benefits of it. And to date, just pragmatically, the costs seem to still outweigh, or the prospective costs seem to still outweigh the prospective benefits. Culturally, I think it's actually quite good not to have them because it just speaks to a pretty flat culture, and just they introduce just semantically a notion of hierarchy that, as I hear it, at least from Stripes, we don't have, and I think it's part of that. You also end up, in a situation where it's actually not just titles. We don't expose levels internally. So if you were a level 6 and I were level 5 at Stripe, officially I wouldn't know that you were a higher level than I am. Now I might know because people talk, but the sort of second order sociological effects aren't there, where the average person doesn't know that you're a 6 and I'm a 5. So maybe I don't care as much. Whereas if you're a senior director and I'm a director, then that's just apparent and everyone knows it. And it just is sort of, I think maybe can lead to bad incentives. A lot of times also, the more senior title is correlated with a larger scope and a bigger org. And we all know there's very bad incentives related to that. On the positive side, we've been a big push over the past couple of years on decision making, and I do think that it gives you a language for decision making. It's like, this is an SVP level decision, This is a director level decision, so on. And actually, maybe a subtle benefit of not having them is just people don't know how to mine your employee base. People try to mine Stripe's employee base a lot.
I can imagine.
Yeah, so some of the considerations.
In terms of like org chart design, then is the org chart exposed internally, and so are people able to de facto back into levels of responsibility? I realize headcount is not a perfect proxy for that, but
yeah, we've made a big effort to sort of create divergence between sort of where you are in the org chart and your level. And so you have You have some people who are line managers, who are some of our most senior engineering leaders. Typically, they report in pretty high. You can
There's some ways of getting there,
kind of back into it. But yeah, we do expose the org chart, and it's very useful. I actually really believe a lot in org design, far more than I used to. But it just maybe it's a part and parcel of growing as a company. But actually, it came up at a Q&A for the whole company on Friday around like, what are we doing to make sure we don't ship the org chart? And to me, that question is very little. Like, we're going to ship it. It better be right. There are certain mechanisms we have to sort of tie things together, as I mentioned. But yeah, we kind of put the org chart front and center, so you know how it's structured.
What have you learned about like org design, I guess, now that you've reflected on it? And is there a takeaway or any like insights that you wished you had known in the early days?
Maybe the thing that comes to mind is not any particular time where it was grossly off, but I feel like I've learned that the sort of incantation that companies reorg too often is probably literally true, but sort of spiritually off. I think there's in the Toyota design principle, or whatever they're called, there's one around continuous improvement. And I really think if you are operating in this continuous improvement mindset, and if you're, growing your ambitions and building new things as quickly as, we want to be at Stripe, there's sufficient change that, you're probably not, if you're not changing your org chart relatively regularly, you're probably, sort of actually destroying productivity. So you're sort of like always weighing the benefits of organizational stability against the benefits of sort of really being organized against your new strategy, your new goals, and so on. So I typically think about any org change we make as having, a life cycle of 12, maybe 18 months at the outside. And then there's obviously like pruning you'll do and sort of like gardening you'll do further down the org chart, on an ongoing basis.
Do you guys still do metrics roulette within product teams?
No, not formally.
Really?
Not formally.
Maybe explain for people what it was and what were why the principle behind it, or
so we used to do. I think this was one of my bad ideas. We used to get together at our sort of leadership team meeting. This was a 30-person meeting. I think it was every other week. And we had a little script that would just choose a team, and a leaf node team, like a line managed team. And it would choose them the day before. And you're just using some Unix rand command or something like that to generate a random number. So every now and then a team would get picked twice in 4 weeks, which was they did not love. And they'd come in and just present their metrics of here are the 4 metrics that we run our team on, and here's how we measure success, here's our targets, here's where we are against them, and so on. And so in theory, it was a good mechanism because you would know that it could be you on any given day and sort of encourage you to really be on top of your metrics. It's like 3 things that I think were problems with it. So one is, this sort of, panopticon design of you can't tell whether or not we're staring at you, so you better be on your best behavior. I felt a little culturally off. Felt a little infantilizing, I think, to people at times. 2 is that we actually sort of were looking at metrics kind of at the wrong level in terms of the leadership team to leaf node teams. And what you actually really wanted to happen was your reports or their reports sort of ensuring that they have the right WBRs, and those may be cascaded down.
WBRs
weekly business reviews. Weekly business reviews. And so you would end up having this sort of junior team to central leadership team conversation that just I think kind of disempowered leaders and didn't really sort of have the right types of conversations. And then the third one was just when you have 10 minutes to do that, and it's a team that you don't have like deep expertise working with, you actually just couldn't give very, very good feedback. And so, we did that for a year. And now actually have a different mechanism, and one that I think is actually working quite well. So are you familiar with a guy named Alan Mulally?
No.
So Alan is a leader I find very inspiring. So he was CEO of Boeing, one of their divisions. I think they're sort of like aeronautics division, or I can't remember what the exact name was, but longtime Boeing executive. And then he became the CEO of Ford, I think in 2008 or something like that. And at this point, Ford was teetering on the brink of bankruptcy already. Huge problems with unions. It was sort of the laggard of the big three at the time. I think the stock price in his early tenure dipped down to like $1 or $2 a share. And by the time he left Ford, which was 7 or 8 years later, stock price was in the high teens. I think it peaked around $24 later. He had something like a 99% approval rate with the union members, which was crazy. And they were the only one of the three major car companies that took zero federal money. So pretty just incredible guy. And I read this story and I was like, man, I got to figure out how the hell this guy did this. And so he has like a system. He calls it the working together system. And, I sort of, just like with Toyota or other great companies, just stolen little parts of it. But one thing we do now, which, I'm just raising him because I have to credit him with some of it, is every other Thursday, the top, 80 or so leaders get together and we run a meeting called the Run the Business Review. And it's a 2-hour meeting. So 1 hour a week that you're dedicating to this. And we go through every single budgetary line item, and everyone has a set of initials. It's the owner. And every single company OKR. We have about 82 of them. And everyone, red, yellow, green. If you are green, you can actually skip it. Give commentary if you want to. Yellow means you have a plan to get back on track, but you're not on track, and we talk about that plan. Red means you're off track with no plan. And so we do this together every other Thursday. We do a QBR once a quarter too. And what I found is this meeting is sort of the right level for collaboration among leaders. If you're red for 3 weeks in a row, we jump out to what we call special attention meeting, where the right subgroup gets together to talk about how are we making a plan to get back on track. And I always find like organizational design mechanisms, like if they're good, they'll be fractal. Like you'll find that, if this thing is working, I'll start to see it happen down below in various places. And this is actually turned into sort of an operating model for the whole company, where, the leaders will have their own RTVRs that sort of happen, 2 or 3 days before, and everything sort of rolls all the way up to this meeting. So I found this has been much more empowering of leaders, maybe a little less scary for line managers, and it's been working well for 2 years.
How many like metrics or things are on that graph? Or
so budgetary items that actually have targets is probably about 30.
Okay.
Then we have 82 company KRs. There's hundreds or thousands of KRs that teams track, but there's 82 tracked centrally. We also have a top 10 among those. And 82 seems like a lot, but it actually works out to be about 1 per 120 employees. And if you're a 120 person company, presumably you'd have more than one. So I don't know, seems like a good number.
Yeah, totally. If you were still doing venture today, do you think you would have gravitated to doing AI? Like, would that be where you're spending your time, or do you think you'd be off doing something totally different?
I mean, I think you have to be, right? It's just setting aside whether the current crop of companies are going to be wildly profitable or wildly unprofitable. There's all this sort of, obvious jibes at inference costs and so on. Just a lot of things are going to change.
Yeah.
I mean, you can just tell. And so I think whenever the world is on the precipice of changing as much as it is, I think you can't ignore it.
Yeah. You've worked now with John and Patrick for 9 years, and I think people hold them in well, I guess before you made the investment, what, a year before that or 2 years before that?
A year before, yeah.
A year
9
before.
months.
So 10 years now, 9 years as an employee. What's something that people don't appreciate, or maybe is less appreciated about those two, either of them, I guess, if you want to call it out separately, although they tend to get grouped together, that maybe people don't appreciate, that aren't working as close to them.
Yeah. I mean, there's so much to appreciate. I mean, obviously they're extremely intelligent. I think maybe it doesn't get talked about that much, but extremely tasteful. Like, just one of the core things that makes Stripe is a sort of level of taste that's hard to teach. But the two that sort of struck me when I was first getting to know them that have really been borne out over the years is, one, they're very kind. Like, they're kind, humble people, and I think that keeps people at Stripe. You're just not working for jerks, and so we've had a lot of our just senior most leaders have been around for a long time, and they're very wise. You have great judgment. Sometimes you just at least I do. I think, have you guys seen this before and you're just not telling me? And I think that's probably correlated with them being very curious and just having a lot of conversations who have seen it before with people who have seen it before. But that's what jumps out.
Yeah, interesting. Are there, you mentioned studying Toyota and studying some of the stuff related to Boeing and Ford's turnaround. Are there other leaders that you've looked up to or been influenced by outside of Stripe, like just people in particular that you admire or have taken principles from?
Well, one I know you talked to was Claire Hughes Johnson, and Stripe would not be Stripe without her, and I sort of consider her in many ways to be perhaps my only personal mentor. And
she was COO for...
Yeah, she was COO. She started a year before me, 2014. I think she was there until 2020 at some point. And I think just her understanding of organizations and people and how they work, her intuition around what's really going on and why something's not working, was just really amazing. I encourage anyone to read her book, Scaling People, I guess it's called. So definitely her. Marianne Lake, who's now runs Chase, who was at JP Morgan, was a really good sort of mentor in my early days as a CFO, and just seeing the rigor that she used to run JPM. She's sort of bouncing between talking to regulators and doing capital allocation, doing product reviews. So she comes to mind. Trying to think of other leaders I've spent a bunch of time reading about. Oh, a good one actually. Frank Slootman.
Yeah.
He impresses me so much, and there's just clearly a formula, right? And it works. One of the things he says that I like to repeat a lot internally, particularly being someone who has sort of grown up on the product and engineering side, is that sales is reality. He proudly calls his companies sales-led companies. And I think in my early days as CFO and CPO, I just spent a lot of my time on all the cool stuff we could do. And then you go sit in the room with the customer, and what they want to talk about is completely different. And the reality of whether or not your product is what they want it to be is right there in the room. You're talking to them about, will you pay more for this thing? Will you buy this thing? Will you move off of XYZ to us? And so I think his approach to being very sales-led, it leads to a customer centricity that I really like.
Are there any unpopular opinions that you hold, or anything within that get espoused as Silicon Valley truisms that you find to be untrue?
I don't know if this is an unpopular opinion or not, but I feel like VCs get a hard time. And take all the politics out of it. Just the venture industry sometimes gets. People talk about how venture is dead, and it's just a reverse auction now in terms of pricing, and no one has pricing power, and blah blah blah, and so on. And that everybody knows the hot deals, and there's romantic notion of how Oracle was discovered by being in the same office park as Sequoia or something. I can't remember exactly what it was, but Larry Ellison was working nearby, and that's how how Oracle got funded. You look at a place like China, where you had this venture boom. I think 2018, you had 50,000 startups backed or something like that. I think this year it'll be maybe below 1,000.
Yeah.
It's literally gone down by 98+%. And so, just the culture of being enthusiastic to back entrepreneurs. I would rather have a system where companies are systematically overvalued rather than undervalued. And so I feel like there's sometimes this notion of, the persnickety longtime VC saying, valuations these days. And I actually remember saying the same thing in like 2013, right? When, valuations were a fraction of what they are today. And so I think the venture industry is just one of the most core engines of growth for, the U.S., for the world. So maybe it's a uncommon view, maybe not unpopular.
Yeah, I mean, I think I agree wholeheartedly with you. I remember there was a very prominent VC that publicly retired on Twitter. This is now 3 or 4 years ago, and the person said, like, valuations are just too out of hand, and I'm stepping away. It's just not enjoyable anymore. And it was funny, if you deconstructed the investments they made, implicitly, this person probably made $500 million personally off of low valuations. And I was like, of all the times you should be investing, and maybe they were even right with the time, but I was like, you in some ways, you could say, like, took advantage of entrepreneurs at lower valuations back then. It's almost like you owe a service to continue playing it through, not taking your ball and going home. Especially since I think it was the person's personal capital with it. I think there's been this meme that I think was largely true 10 plus years ago, that probably some high percentage of VCs were a little tone deaf, and the founders came to them, and they were masters of the universe because they had access to the purse strings of capital. And I think that whatever that ratio is a far smaller percentage than it is today, of people just waking up and trying to do their best in founders. And it's certainly a lucrative business if done well. And so no one should feel particularly bad for any venture capitalists out there. You don't need to start a hug your venture capitalist campaign or anything. But it does feel like it's the meme has kind of outstripped the reality at this point, which I think is a good thing. I don't know. All the jokes led to self-awareness, which I think or cancellation, as this case may be.
Yes, exactly, and that's true in any industry for sure. And so it's not a sort of, like you say, a blanket hug for every venture capitalist. But I just think that we sometimes deride the industry when, in fact, I really think it is something that makes the world great in many ways. I remember probably 2010 or 2011. One of the VCs I look up to the most, Jeremy Levine, who I'm sure you know from Bessemer.
Yeah, did a podcast with him.
Oh, nice! Amazing. I should listen to that one. He's probably
incredible,
saying much more interesting stuff than I am. But he, I think we were at Balthazar just up the street, and I remember him talking about Toby from Shopify, and just talking about how he had this founder who every board meeting just surprised him in a new way. And this would have been around the time that Toby was, getting started with Shopify payments and plugging payment systems into Shopify. And Shopify went public, I don't know, maybe a few years later at a valuation of 1 point something billion.
I think
maybe lower.
It was either 1 or 900. It was something like that,
right? Yeah. And now it's a $100 billion company.
It's amazing.
And so to that end, valuations needed to rise.
Yes. Yeah, for sure. What, I guess as we wrap, what keeps you motivated today?
Well, for one, it's still fun. And that's the most important thing. Just, does it get you out of bed every day? I think a lot of people who I've talked to in my career, predicted I would have founded a company by now, but I love what I'm doing at Stripe. And, there's just always something new. Back in 2020, we were about a year and a half into Stripe billing, but it was still a bit of a a toy project with a handful of people on the side. And we were talking to Atlassian. And Atlassian, amazing company, cobbled together in some ways via a bunch of acquisitions, almost like a holding company for a bunch of different SaaS services, doing an amazing job of like cross-sell, cross-subsidy, and so on. As you can imagine, their commerce system was tricky because they're billing for Bitbucket in this way, and Jira in this way, and Confluence in this way. And we thought to ourselves, like, what better way to test billing and its future applicability than to take them on as a customer? And so, if I just think about the evolution from that moment in 2024 to today, working with, RSIs and GSIs on selling, the billing integrations to hundreds of thousands of merchants, it's a fun 4 years. And I just see many more in the future for Stripe. I think people talk a lot about AI as a disrupting technology. They also talk about it a lot as a sustaining technology. As you noted a little while ago, we have some of the most interesting data in the world. And I think there's a lot of ways we can leverage that data to advance the mission of growing the GDP of the internet. Capital, for example, Stripe Capital we're finding just that when you can get a small business a loan, it actually helps them grow and grow sustainably, which is sort of amazing. So Stripe Connect, as I mentioned, is our product for complex money movement for marketplaces and platforms. One place we're seeing just really amazing growth is our Connect users providing loans to their users via our sort of programmatic capital API. And so I'm really excited to see what foundation models, and I guess LLMs is more of a, everyone thinks of chatbots. It actually is really just about autoregressive transformers, but what they can do for underwriting, and can we 10x the applicability of credit. So I just find there's a lot more fun to be had, and looking forward to the next 10 years.
Yeah, well, good. Well, thanks for doing this. We did a full podcast and no question of when you guys are going public. So
appreciate that.
Yeah.
Thanks, Logan.
Thank you for joining this episode of the Logan Bartlett Show with President of Stripe, Will Gaybrick. If you enjoyed this conversation, we'd really appreciate it if you press subscribe on whatever podcast platform you're listening to us on, as well as share with anyone else that you think might find it interesting. We look forward to seeing you back here with another great guest on the Logan Bartlett Show next week. Have a great weekend, everyone.